It's Saturday, June 17, 2023. Please make sure to like, subscribe, share this video, all my videos, and make sure you hit that bell notification down below so that you are alerted when the newest videos drop. Few things I want to talk about today. Printed up some articles. You know, people will say, oh, this is repetitive. I keep repeating things. Here's another stack of brand new news today regarding the economy. And I flew the drone over the new Disneyland development out here in Rancho Mirage. It's on nearly 800 acres. They're going to build over 1,800 homes, a 26-acre lagoon. I think they're putting on a golf course. They're going to do shopping. It's going to be huge. And I flew the drone over it today. And I'm just wondering who in the world is going to buy all these homes. There's so many homes now sitting on the market. Right now in this county of Riverside County, we are down 41% year over year in regards to sales. Sales are down. Home sales are down 41% year over year. Prices, I think, are down about 3.3%. Not a whole lot, but prices are going to follow this plunging sales market. We're seeing days on market these properties staying on much longer. Inventory is beginning to tick up. And we have all these new homes being built right now that are just sitting on the market. And I flew the drone over today over the Disneyland project because I'm just thinking to myself, who in the world's going to buy all these homes? Right now, rates are hovering around 7%. These homes are going to be expensive. And who in the world is going to be able to afford to buy these homes? And there's so many homes right now, brand new homes sitting. And I'm looking at the county sales down 41% year over year. And prices have come down a little bit, and they're going to come down a lot more, ladies and gentlemen. So stay tuned to the end of this video, and I'll play that clip. You'll see what an 800-acre project looks like that Disney is doing right now. And comment down below. Do you think that they'll finish this project? Do you think they will sell these homes? Who's going to buy them? Maybe foreign investors, quite possibly. But there's so many homes now sitting, and sales are plunging. And yes, somebody's going to buy them at some point. But are they going to sell for $1 million? Probably not. I think that's about where they're going to be asking for these homes, is around $1 million. Not sure on that, but from what I was told, they're going to be around $1 million. But that can change really quick. So I'm going to show you what this project looks like. They're just grading it right now. It's enormous. And to think about the amount of money that's going in there and the expectation that everything is going to be okay in this economy and the housing market a year from now, 2 years from now. This project is going to take years to finish. Where will we be a year, 2, 3 years from now? We're in big trouble, ladies and gentlemen, and Disneyland may not know that. They may be in denial also, but they can stop a project just as quick as they started one. So we'll see how it plays out. But stay tuned. Check out the clip of that. It's pretty interesting. It's an enormous project. But I want to start with this first article coming from Fox Business. Big stock rally could be followed by big collapse. Bank of America. Michael Harnett, the chief investment strategist at B of A, who correctly, it says, predicted last year's sell-off, warned in a Friday analyst note the stock market could resume its downward spiral very soon. We're not convinced, he said, that we're at the start of a brand new shiny bull market. It still feels a lot like 2000 or 2008, he says. What do you think? Does it feel like 2000 or 2008? To me, it feels much more like a 2008, 1929. That's the combo it feels like to me. And it's amazing when I look at these projects that are being built out here right now. So many new homes. You've watched some of my past videos. You've seen a lot of these new homes. But this Disney project, nearly 800 acres, is a big one, and there's so much money tied up. And who are the banks that loan Disney the money? More regional banks. And what happens if they have to stop the project? What if the project begins, they start building houses that can't sell them, that discount them? I mean, this is what we saw back in 2008. And you know, back in 2008, there were builders out here selling lots at 10 cents on the dollar. Many homes out here were selling 50% off and even more. So history does sometimes repeat, ladies and gentlemen. Here's one from the Daily Mail. Wall Street job cuts set to hit more than 15,000 this year as Citigroup becomes latest company to announce 5,000 layoffs amid most challenging job market since financial crisis. The bank told investors this week it planned to axe the rolls by the end of the second quarter. Goldman Sachs eliminated 3,200 positions in the first quarter of this year. Morgan Stanley plans to slash 3,000 jobs this quarter. Bank of America cutting 4,000 positions by the end of the month. We are really witnessing something that is not getting better. It's getting much worse. These are more red flags. And you know, a lot of this is in the mortgage departments of these banks. And this should tell you something. Is this really the right time to buy a house? You think you're not buying in a bubble right now? Look at the uncertainty that is taking place in this economy, what's taking place geopolitically, what's taking place globally. Over $300 trillion of global debt. I think we're about $308 trillion. We're now $32 trillion in debt right here in America. And we'll talk a little bit more about that in a second. But I don't think that this is a very good time. And this is my opinion only. Please comment down below. Let me know your opinion. You can agree to disagree, whatever. But I really do respect your opinions. Is this really the time to be purchasing a house or a big ticket item? There's so much uncertainty, job uncertainty, the inequality out there of opportunity. Just the amount of job losses, ladies and gentlemen, is staggering. And I don't know if anybody has a job that they can say is 100% safe right now. We see AI coming in, we see robotics coming in, we see huge cuts coming because these companies are all about the bottom line, the profit margin. And we're going to see more job cuts. And we're going to see a economy continue to really slow down here. And we're going to, I mean, right now we're seeing the brakes hit on this economy. And no matter what sector you work in, I don't think anybody's safe right now. And this is why I say you got to have a reserve put away. You got to have some capital put away. You have as many months possible in reserve in case of a rainy day, in case you or your spouse loses a job that, you know, you can get by for the next 90 days, next 120 days, or the next year. The problem is people have no money saved up. They're paycheck to paycheck. We are seeing, I think the national number is 39.9% of people's income is going to their mortgage payment. That is extremely dangerous. That is one bad day, one emergency away from big trouble. And, you know, we go up to the Bay Area, we're looking at 62, 64% of income going to a mortgage. This is extremely dangerous. I think in California, we're around 50%. These are dangerous numbers. You are one flat tire away from big trouble. Falling behind on your house payment. So, you know, make sure you have a reserve put away in case of emergency. And when people don't have that, when they or a spouse loses a job, they're going in panic mode because they don't have any reserve. They have to make that payment by the end of the month. And if somebody loses a job, they're in chaos. They're in panic. They don't know what to do. So if you have 90 days, 6 months, a year put away, and somebody loses a job, it's not great, but at least you're not going to go in panic mode. You have some time to figure it out, some time to find another job, and not panic. The worst thing you want to do in an emergency is panic. And unfortunately, most people in this country are living way beyond their means. Many bought into the FOMO the last couple of years, still buying into the FOMO, and they are really jeopardizing their future, their life, everything. And many of these people will lose it all because to me, it doesn't matter what happens to interest rates or where mortgage rates go. What matters is a job. If you don't have a job, the job market is what supports the housing market. We've seen housing markets go through times where mortgage rates were 18%, 15%, 12%, and people were still buying houses. Prices were much more real. Now we have overinflated prices with mortgage rates going up, and that's a big problem. But at the end of the day, none of it matters if you don't have a job. You can still buy a house at 18% if you have a good, well-paying job and the price of the home is realistic. People were still buying homes. But it's going to be very difficult now to buy a home that is completely overvalued when you have 7+% on a 30-year. Very, very difficult. The hedge today, restart of student loan payments to slash household spending by $15.8 billion every month. For most, this will be the first time since March of 2020 that they've had to make payments on their student loan debt. But this is definitely going to be a crash on household spending. We're going to see a $15.8 billion headwind. That's $190 billion per year hit U.S. spending as the average student debt holder sees an incremental monthly payment of $390 beginning this fall. And maybe $390 isn't a big deal to you, but to most people, it's a big deal. And to these people who have 30, 40, 80, 100,000, 200,000 in student loan debt, $390 is going to change their life. This is going to affect 16% of the U.S. population. 40 million Americans carry student loan debt right now. 40 million. So this is going to affect a lot of people. Here's one today I was reading on CNN. Nearly 1 in 5 U.S. adults have been diagnosed with depression. So we're going to see a lot more depression, ladies and gentlemen. And a lot of this is because people are overloaded with debt. Many people made bad choices, got a degree that's worthless, and they're going to have to pay for it. Many people bought into the FOMO. They went out and bought a house the last couple of years, overpaid, probably didn't even look at the house, didn't get a home inspection, just bought it, sight unseen. Now they're stuck. Many people being called back into work. They relocated an hour, 2 hours away, maybe out of state. Now they're getting called back into work. What are they going to do with that house? They're going to sell it? You think they're going to get what they paid for it? Absolutely not. So a lot of this people brought on to themselves. They're loaded with debt, and now they're loaded with depression. And the only advice I can give to anybody is going to the gym, working out is going to be one of the best things for your depression. But most people will probably not do that because that's hard work, that's time consuming. So they'll probably go on another pharmaceutical to help with their depression, because it's always about another pharmaceutical, another pill to fix somebody's problems. You know, if you want to get in good shape, you want to lose weight, take a pill, not go to the gym, not change your diet. If you're sad, you're depressed, take a pill. That's the end all be all. That's how people fix things today. It's really, really sad. But we're going to see more people depressed, addicted to pharmaceuticals, getting deeper and deeper into debt. Not healthy for society, ladies and gentlemen, not healthy at all. So what does that mean? It means people are going to drink more, they're going to eat more, they're going to get more out of shape, they're going to be more suicidal, more foreclosures, more bankruptcies. Terrible. It really is. So, you know, take responsibility for your actions right now. Get out of debt. Maybe if you can sell right now and downsize, you know, if you bought a car that you really can't afford, maybe it's time to sell it. If you can. Now, here's the problem. Here's the problem. Yet again, ladies and gentlemen, by the time people wake up and realize this and they go, oh, we better sell, it's too late. They're upside down on the cars, on the houses. They're stuck. They're a rat in a cage, and it's going to end bad. Here's another one today. Paychecks not depositing. TD Bank says system glitch. Anybody dealing with TD Bank? The bank is being inundated on social media with concerned customers raising concerns about being unable to pay their bills and automatic payments putting their accounts in the negative. This is affecting TD Bank in America and Canada. TD Bank is not providing details on the source of the problem. So is it a glitch, or is this more of the cyber attacks that we've been hearing about? Is your money safe in these banks? You have to think about the retaliation that we're going to get from other countries. And it's going to be in cyber world. And think about if they ever attacked your bank, or they attacked the banking system, they attacked the stock market, Wall Street. What would people do? This is becoming reality now, ladies and gentlemen. We are going to see retaliation here on our grids, in our banking system, in our financial institutions. Are you prepared? You know, this isn't about just having $200 or $300 under your mattress put away for the weekend. This could last a very long time if a grid went down or a financial institution went down. This could take weeks. What if it took a month? Anything is possible today. And anybody laughing at this saying, oh, this is far-fetched, it's impossible, it's doom and gloom. Just go back and look over the last 24 months what has taken place and tell me that this is not possible. Anything is possible now in 2023. The US economy shutting down, the global economy shutting down, all this was impossible years ago, but we just went through it. We are now looking at a possible World War III. That wasn't possible before, but now it's possible. We're seeing so many things that we never thought humanly possible happening right now. And of course, you can look at society and what's happening in society. We never thought years ago we would see people act the way they do. It's shocking. But anybody that sits here and says that could never happen, these people are in la la land. Anything can happen now. When you can shut down the entire global economy, anything can happen, ladies and gentlemen. The hedge today, broke generation. 64% of Gen Xers have stopped saving for retirement. These are people born from 1965 to 1980. 56% said they have less than $100,000 saved for retirement. 22% said they haven't even saved a cent for retirement. 64% said they've stopped saving. The average Gen X owed a whopping, get this, a whopping $43,438 per borrower in student loan debt. Gen X holds 38.8% of the $1.63 trillion in federal loan debt. That is absolutely shocking. How are people ever going to pay this back? Unbelievable. Now these people have worthless degrees. They're completely bankrupt, broken. No way out. Really, really sad. People, you have to really think before you commit to something like this. Before you commit to buying a car, a house, going to college. Is it worth it? Are you going to be able to pay for this? What if something happens? What if? People never think about what if. They think everything's going to go perfect. But then all of a sudden something happens. Something pops up in their life. Maybe it's a medical situation. Maybe it's a loss of a job. Something happens and now all of a sudden things change. And people don't put that into the formula before they do this, before they make these choices. You got to think, worst case scenario, if this happens, that happens, that happens, what am I going to do with, you know, this $40,000 student loan debt? People don't think. Instant Pot parent files for bankruptcy protection. Pyrex glassware, maker of Instant Brands glassware, is filing for Chapter 11, based out of Chicago. I'm not sure how many people are employed by this company, but in 2020, sales of electronic multi-cooker devices, most of which are Instant Pots, peaked at $758 million. Sales have fallen 50% by 2022 to just $344 million. Consumers are now buying what they need, what they want. I guess they're not buying these crock pots. They're not maybe buying as much meat that typically they put in these pots to cook. People just don't have the discretionary type of spending habits that they did a year or two ago. And we're beginning to see that. Here's another bankruptcy, another Chapter 11 right here, right now. I don't know how many people are employed, but it's probably a pretty decent amount of people. And these are people who are going to probably lose their jobs, many of them. Here's another one today from Yahoo News. U.S. Energy Department gets 2 ransom notices as Move It hack claims more victims. The U.S. Department of Energy got ransom requests from the Russian-linked extortion group C10P at both its nuclear facility and scientific education facility. Again, what if your bank gets hit? What if an entire city got hit? What if Wall Street got hit? How does the system function when everything is run on computers now? I've been to places, retailers in the past where their system was down. They couldn't even accept cash. They are just dead in the water. They cannot do anything. So think about what would happen, you know, if the grocery stores just shut down. Or people or retailers and businesses couldn't accept plastic. Maybe they would accept cash. But what if they didn't even accept cash? Are you prepared to you know, go into survival mode for a week or 2 weeks or a month? You have the food and water preparations put away. Again, these are the things we have to be thinking about now, thinking outside of the box, because this is 2023. Before you know it, we're in 2024. The amount of technology out there and the fragility of the system. It's very fragile, ladies and gentlemen. It's very, very fragile. And at some point, I think most of us are going to be affected by one of these attacks without a doubt. Whether, you know, it's your store, or it's the school your kids go to, or it's a bank you deal with. We're all going to be affected at some point by this. And the question is, to what degree? How bad could it be? How bad could it get? It could get very, very bad. Look, they could shut grids down with these ransomware attacks. They can shut water systems down. They can shut the banking system down. That's how powerful this technology is. And we're not prepared for it. We are not prepared for it. I'm going to finish with this last one. I thought this was interesting. Good Morning America reporter in San Francisco says they're not filming downtown because they were told it's too dangerous. This was on the Gateway Pundit. It's too dangerous for a film crew now to film in San Francisco. Frightening, isn't it? And yet most people just go on their day thinking that everything's going to be okay. We're going to get through this. It's going to get fixed. It's going to get resolved. No reason to prepare. Leave it in the hands of the politician. Leave it in the hands of the banks. Leave it in somebody else's hands other than yours. I think that there has been no time more important than right now to be as self-sufficient as you possibly can. And that means physically, that means spiritually, that means financially. Too many people are still trusting the system, that the system is going to operate, that the system has their best interests at heart, that the system is going to be fine, that the system would never shut down and take your money, that the system is always going to be up and running, that it can never be a casualty of a cyber attack. False, very false. And yet people out there will just say, well, keep your money in multiple banks. That'll solve the problem. You're still in the system, ladies and gentlemen. You're still in the system. Now you're in the system 3 different ways instead of 1. I say get out of the system the best that you can, the most that you can. Hold some gold, hold some silver, hold barterable items, hold cash where you can get to it. Keep some money in the bank or the banks. But I think for me personally, the majority of money should be out of the banks. You should be the bank. You should be your own bank. We are getting really close to some serious, serious events. And we've been warned. We've seen, what now, 4 banks go down, 2 major banks in California. People said that could never happen. It happened. More are going to go down. Just look at what's happening in commercial real estate. Look at these builders, building 2,000 homes here in Rancho Mirage. I don't know who did the loan on that or what banks did the loan on that. But I'm sure Disney didn't use all their own money. But what happens when we begin to see these home developments go down? What happens when we see more of these office buildings go down? These major hotels going down? And the owners of these buildings just going, hey, Here's your building back. Goodbye. We can't pay you. We're going to see big banking trouble. And people still believe that their money is safe in these banks. But just to be safe, I'll put it in 3 different banks. You're still in the banks. You're still in the system. And I know that there's people that have to have some money in the banks for their businesses, for real estate purchases, things of that nature. But be careful, ladies and gentlemen. Keep it to a minimum. And I think most of all, just be monitoring things daily with what's happening. And if things begin to get dicey, you have to have a plan to get that money out and get it into something else or get it somewhere else. So I'm going to leave it there today. It's a beautiful Saturday. We're finally getting warm out here. But a lot happening, and you have to really be involved with this daily now, because you do not know what's going to happen tomorrow, the next day, what's going to happen next week. You have to be prepared. You have to be versatile. I think you have to be ready, ladies and gentlemen. Things are changing, and right now we're going to continue to watch this economy fail. It's going to get slower. We're going to see more stagflation. We're going to see more shrinkflation, and we're going to see more inflation. It's all happening at the same time. I don't know how we're going to get out of it. I don't know if we do get out of it. But what I do know is we can't worry about things that are out of our control. Worry about what we can control. So make sure you have access to your money, to your assets. Make sure you have a plan. Make sure your family has a plan. And most of all, make sure you have security, because if you can't protect this stuff, you can't protect your family, it's going to be a real bad day for you. So again, security should be your number one asset next to God. Again, if you can't protect this stuff, why even have it? Have a good weekend, ladies and gentlemen. God bless all of you. Thanks for all the prayers. Thanks for the support. Thanks for all the mail. And thanks for watching. God bless.